Hey everyone, welcome back to Corporate Decoder. Today, SNCY Sunday Country Airlines Holdings Incorporated just filed an unusual 8K reporting a shareholder vote, and honestly the results are a bit of a mixed bag, especially when you consider their big acquisition deal. Quick note, this is not financial advice, just my take on public filings for educational purposes. The real story here is how the shareholders voted on the company's big merger, and whether they are ready to sell the airline. So, on May 8th, Sunday Country Airlines Holdings Incorporated held a special meeting for its shareholders. The main event was a vote on a big acquisition deal. Basically, Allegiant Travel Company was looking to buy Sunday Country. This deal was set to merge Sunday Country into Allegiant through a couple of company structures, merging Merger Sub 1 into Sunday Country, which would then survive as a subsidiary of Allegiant. Then that surviving Sunday Country entity would merge into another Allegiant subsidiary, Merger Sub 2, with Merger Sub 2 being the ultimate survivor. It sounds complicated, but the bottom line is Sunday Country as an independent public company was on the table. Shareholders had three main proposals to vote on. The first and most critical one was to approve the adoption of this merger agreement. Think of it as the shareholders getting the official thumbs up or thumbs down on selling the company to Allegiant. This was Proposal 1, the merger agreement proposal. Then there was Proposal 2, which was about approving the executive compensation tied to this merger. This is often called a say-on-pay vote, and it is a non-binding vote. It means shareholders are just giving their opinion on how much the top executives might get paid if the deal goes through. It does not stop the deal from happening. And finally, Proposal 3 was an adjournment proposal. This is just a contingency plan. It is in place in case on the day of the meeting there weren't enough votes to approve the merger. If that happened, shareholders would vote on whether to allow the meeting to be postponed to give the company more time to get the required votes. Now, let's look at how the shareholders actually voted. Out of about 54 million shares outstanding, nearly 44 million shares, or about 81%, were present at the meeting, either in person or by proxy. That is a good turnout and definitely enough to make the votes count. For Proposal 1, the merger agreement proposal, a massive number of shares voted in favour, 43,971,505. Only a tiny fraction, 32,926 votes, were against it, with about 39,000 abstentions. This is a clear, resounding win for the merger deal. The shareholders are definitely saying yes to selling Sunday Country to Allegiant. Moving on to Proposal 2, the compensation proposal here. Shareholders also approved this with 40,981,581 votes in favour. However, there was a bit more dissent here than on the merger itself. About 3 million shares voted against it, and a small number, roughly 7,500, abstained. While it passed, the opposition here means that some shareholders might not be entirely happy with the payout for the executives. This is typical in these deals. And for Proposal 3, the adjournment proposal, the shareholders voted to approve it with over 40 million for votes. But here is the kicker. This vote wasn't actually needed because the merger agreement proposal passed by such a wide margin, there was no need to adjourn the meeting. So that proposal was approved, but it ended up being a formality. The filing doesn't contain any detailed financial statements within the main body, which is expected for an 8K on a shareholder vote. It mostly points to the exhibits for more information, like this cover page interactive data file. This is pretty standard for this type of filing. Scroll. So, what does all of this mean for Sunday Country Airlines Holdings Incorporated? Well, the story here is overwhelmingly positive for the continuation of this acquisition. The shareholders have clearly voted to approve the sale of the company to Allegiant Travel Company. This means the deal is on track to be completed, and Sunday Country will likely cease to be a publicly traded standalone entity. This is a huge event for the company and its investors. The big question now is what happens next. With the merger approved, we're likely looking at Sunday Country becoming integrated into Allegiant. For investors, this means their Sunday Country shares, which trade under SNCY on the Nasdaq, will eventually be converted into cash or Allegiant shares, depending on the terms of the merger agreement. Given the strong support for the deal, it is highly probable that this acquisition will go through. While the compensation vote showed some reservations, it did not have enough power to derail the main event. Looking at the broader context, Sunday Country has been a player in the airline industry, and this deal signifies a major shift. We've seen recent news mentioning implied volatility surging for Sunday Country Airlines options, and an insider sale by the QO just prior to this report, which might suggest awareness of the upcoming changes. While this filing itself doesn't dive into the financials, the acquisition vote is the most material event. Now, looking at this whole situation, the company's direction is now tied to Allegiant. From an investor's perspective, the focus shifts from Sunday Country's standalone performance to the terms of the merger and the future plans of Allegiant. The risk I am watching is how effectively the integration will happen and what impact it will have on the combined operations and potential synergies. What I am actually looking for is the final closing details and the shareholder payout structure. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, hit like and subscribe if you found this helpful, and join our Discord chat in the description.